Hey everybody, welcome back to Ryan Makes Sense. Today we are going to be looking at alcohol stocks. Yesterday was the smoke, today is alcohol. I have no position in any of these, but I do just want to review them with you to see how they're looking and if we can find any potential opportunity. So let's go ahead and let's just look at all these. There's only 5 or 6. I'm just going to go ahead and open them all up. All right. So the first one is ticker symbol ABEV. It's $2. It's a $2 stock. It's interesting because typically stocks under $5 are penny stocks, but I mean, this is a multi-billion-dollar company. Ooh, and it's only ever really gone down. Okay. This goes back to 1997. Wow. They are profitable. They do pay a 6% dividend. They make, oh my God, they make $15,970,000,000 a year. They have 2.9 billion in income. Wow. Wow. That is truly insane. The price to earnings is 13, and also the forward P is 12. I'm flabbergasted. The gross margins are almost 50%. Total cash on hand 3 billion. Total assets 27.8 billion. Total liabilities 11.3 billion. That is beautiful. That is wonderful. Wow. That's insane. I mean, if I'm looking to get into a dividend paying stock at a cheap price, this looks very attractive. You will want to see if this line holds right here. This is the support going back to 2009. And then we have resistance up here. Going like, we could go down to here, but major resistance there. I'm not even down all the way, right? So it looks like the major resistance has been overtaken there, but we also have major resistance here. A lot of room, a lot of potential. A lot of potential. What are institutions doing with ABEV? That is my question. Finviz data shows that institutions own 8.56%. That's pretty incredible. You would think it'd be more. We're going to find out right about now. 10.56. That's a nice increase for a company this size. Any big holders? No. Do we have any Vanguards? No Vanguard. No BlackRock. Interesting. So we notice Vanguard and BlackRock have a high. Oh, there's Vanguard. What's going on? Okay, we're gonna do a search again. Okay. Vanguard, there's several Vanguard funds. 3.4 million, 22.9 million shares, 5.17 million shares. Okay, Vanguard does have a substantial position here. ABEV, incredible. What type of beer do they have? Let's just see. Or alcohol. Okay, just international. It looks like international alcohol market. So ABEV looks super duper solid. I mean, if you're a long-term investor looking for a yield, dollar cost average in, safe. CCU, I've definitely charted this one out before on Thinkorswim here. I've owned this one for a while. I used to. Ooh, it looks like it's fallen below and it's trying to get back up. Crazy. Very crazy. I think we'll see the apex around the end of 2025. Looking at the high level data points here, let's just go to the monthly really quick. They pay a 2.8% dividend. It's a little bit overvalued on the price to earnings right now. The forward price to earnings is 12.89. That's pretty good if we keep the current trajectory into the future. Earnings per share the past 5 years has been negative 23%, not good. Sales over the past 5 years, positive 3%. Not bad, not bad. I think this company has a couple years to turn it around, and I think they would be a little bit more solid than they are now. We're not gonna entertain this one much anymore, just due to the fact I think there's a lot more chop that needs to happen before this company is ready to turn the ship. And I just base that off of the EPS over the past 5 years and the sales being pretty lackluster, and the sales quarter over quarter, EPS quarter over quarter. So, and then the very low guidance. We're just gonna pass on CCU, but don't worry, we are moving on to the next one. Bud. All right. Bud Light. Get yourself a Bud Light. Profitable. They pay 1.9% dividend. Price earnings a little bit expensive in the future. Same trajectory. PE of 15 is decent. Earnings per share this year, 9%. EPS past 5 years, barely positive. Sales, barely positive. EPS quarter over quarter is negative 25%. Sales quarter over quarter, negative 2.7%. This one's okay. These alcohol stocks are not as attractive as the tobacco stocks. That is for freaking sure. What are institutions doing with Bud? It shows that institutions own 5.5% of Bud. New data shows 6.57. So about a 1% increase or 2% increase. There are 1.76 billion shares outstanding, which is absurd. Wow, this is trade. So they do 59 billion in sales, and it's trading at $59. This is not even accounting for income or the market cap. I think this one has a lot of upside to it if it can. Yeah, and here's a bull flag, really. I think this is going to go to 70s probably in the near future. Just my opinion. Don't hold me to it. This is decent. I mean, I'm not as excited as I was with the tobacco stocks or the monthly dividend paying stocks or a lot of my high growth stocks. But I mean, this is trading pretty fair value at the moment. Yeah. I think Bud's all right. Are insiders buying? Did insiders even buy during that dip? No, that's sad. All right, that's Bud. It's not really a compelling case. I have not seen any really compelling companies yet. Now is TAP, which is Coors, Molson Coors. It is up over 100% in about a couple of years. Metrics look strong, or the technical analysis looks strong. They are profitable. They have a 2.5% dividend. Sales are outstanding. Price earnings is right on cue. Forward price earnings is 11. That's insane. Institutions own 81%. 81% is the old data. We'll see what the new data is. Okay, so we have insiders. Okay, so this was a 1-for-1. Okay. No real big ownership down here listed. Okay, so old data, apologies, let's go back up. Old data, institutions own 81%. New data is 96. That's a 15% increase pretty much. Wow, and you can see it's risen. It has risen. I'm guessing Vanguard and BlackRock. Yep. Vanguard slightly increased, BlackRock slightly decreased, and Dodge and Cox slightly decreased. No red flags, honestly. I think if you're looking to add some alcohol stuff to your portfolio, check this one out. Good dividend, undervalued in the future. It's a defensive one. Can't really go wrong, in my opinion. This was FMX. I'm hoping for something compelling. This is Mexico. Let's see what we got. Let's go to the monthly. Wow, this went 100% in about a year. That's fantastic for them. Wow, I had this charted and everything and I missed it. They're profitable. Their price to earnings is cheap at the moment. Their forward price earnings is expensive, meaning they probably lowered their guidance and things might slow down. They do offer a 3.6% dividend. They are profitable. Earnings per share over the past 5 years is good. Sales over the past 5 years, good. This one is more compelling than I have seen. FMX. And it is cheap now, but it shows that it's going to get more expensive in the future. And I don't know why, based off of what I can see here. Gross margins are 39%. That is amazing. Institutions own 34.29%. That is old data. New data is off, so I have to calculate manually. Institutions own 92 million shares. 92 million divided by 214,840,000. 42%. So it's up 8%. Institutional ownership is up from 34% to 42.8%. Decent. It's getting pretty hot. Money flow is going down. Momentum is coming down. I think we wait and see how this one acts on support. Probably like right there. That's a good support line. And you could look at this. I wasn't even looking at this. This candle came and just touched it. I was looking more so right here. So this confirms it. I think 99, once this comes back down to 99, we'll probably have to reevaluate this one, but this looks good. This has been around since 1998. You could have bought this for $5. Now it's at 128. How do you feel? And then we're looking at ultimate support and resistance. Come on. Let's put this there. Let's see it come back down right here. Nice little landing zone. Whoop. All right. FMX, I think this is probably the better, most compelling one so far. Last but not least, Sam Adams. I think this one used to be This one used to be $1,300. We might have a compelling case here. They're profitable. They're expensive. They don't offer a dividend. They've got very little debt. Institutions own, let's see, Sam. Institutions own 62% as of old data. New data is 71%. So about a 9% increase. Yeah, and it's kind of just tapering downward. Pretty crazy. The stock really ran up 10x, basically, from 150. Well, not 10x. I'm sorry, not 10x. How long has this one been around? 1998. This was a $7 stock. back in 1997, 1998. Wow. Holy cow. What a fall from grace. Is Sam Adams worth this value at the moment? We just have to check. They have 3,540,000 in market cap. Plus they do 76,250,000 in income. Plus they do 2 billion, 10 million in sales. Okay. Balance sheet. They have plus 298,490,000. And total debt, that's it. 37 minus 37,600,000. This is gonna be a very high stock price. Divided by 9,200,000. $639 stock trading at 294. That's insane. Analysts have this one at 370, 386, 300, 335, 350. Oh, there are also shares outstanding are 12 million in 2023. So some of this data could be older. Heads up. But man, look at these dips down here. These would have been the times to buy when it's troughed down like this. And it's going down. Looks like it might go even further. So keep your eye on this one. If we can get Sam at 134, that would be absolutely insane. That is the next resistance. This area has fallen. This area has fallen right there. So you can see the stock price has fallen below this line. We might have some decent support right there, 243. I think Sam Adams gets to 243 and then maybe reevaluate then, but it's neither here nor there. I don't own any alcohol stocks at the moment. Maybe I do like Constellation Brands, but none of these ones. All right, you guys, thank you so much for watching. If you made it this far, consider subscribing, leave me a comment. Let me know if you have a stock you want me to check. Have a great day. Bye.